All right, so we have FOMC coming up. FOMC. And any of y'all got any predictions for where y'all think this is going? Sorry, let me move this. I had us taking this low out down below here, but obviously we mitigating that. So y'all look, let me introduce something real quick that I have introduced to the previous group, but I'm showing you guys now because you guys can take the weekend to learn this, as well as I'll show some of this tomorrow. So you see this zone right here? What's significant about it? Nothing, because it happened after the high was taken, right? But what makes it significant, now that it actually did something, is what it's doing. So what we see is a bounce on the top of this, right? Then we see another bounce there. And we see another bounce there, and then we see another bounce there, and we see another bounce on it, and we see another bounce on it, right? And then you see us trade below it, right? When we trade below that, oftentimes what we're anticipating is for price to now trade back into the range of this zone along with the high that it put in. Now, this is something that happens on both the top side and the bottom side, but there are times where I'm telling you guys, I'm waiting for price to go below here. And we see it, we see this happening around it. It's because what we're doing is we're mitigating this multiple times. And that's weakening this particular zone. And what we end up doing is trading below it, and we tap into something unmitigated to the left that sends us back into the range, right? So we see that there, right? Now let's go up into here. We have the same thing here. You see how we trade out of it and we come back into it. We tap it there. We tap onto the top there. We tap onto it there. We hit it there after going back out again. We hit it there and we hit it there. What do we end up doing? We end up trading below it and going back into the range of it. So oftentimes what I'm doing is waiting for this particular thing to occur. I know that any zones that I'm choosing inside of here, any zones that I'm choosing below here, me trying to catch another tap onto this, I know those are the riskier trades. But the larger move often comes after the breakdown of this zone. We violate it, and then you see us trade back into the range of it. So that's why I always talk to you guys about what? Lower prices. Lower prices. Because oftentimes when I'm seeing this occur here, I know that when we trade below it, I can find a move to go back into the range of it. And you'll see this phenomenon happen, you know, pretty much everywhere. On the top side, on the bottom side, but you'll see it occur. We have this same thing here. Look. This little down move that's inside of here. Right? What do you see? You see a tap here. You see another tap here. You see another tap there. You see another tap there. And when we go below it, what do we end up doing? We violate it, tap into something unmitigated below, and we trade back into the range. So that's why I prefer lower prices, because I know that within lower price, and especially at when we enter into bottoms of those ranges, I know that I can find a move trading back into that direction. And a lot of the times when this gets liquidated, a lot of people are ready to go short because they think it's what? They think this is support, and they think it broke below the support, and now it's supposed to act as resistance. And then what do they end up getting? Trading back into the range. They have their stop loss. They get in at the beginning of it, and they put their stop loss directly behind that support. And then you end up seeing it trade out. They're waiting for the retest. That's support and resistance traders, right? And then you see them call it a fake out or whatever other, terms they use. But it's something that happens often, and I'm gonna show it tomorrow in a live market. But this is where that idiot box forms, right? So look, never mind the one that we're doing over here, because we have one over here, is this. You see I have the green line at the top, the red line at the bottom. We're doing it on this, mitigating that multiple times. So in the event that we trade below it, you see us go back into the range of it. But the same thing just occurred here, where we were bouncing across this multiple times, right? We traded below it, right? Yeet beat, and then right back into the range of it. So it's a common thing in price, common thing in what's coded in this algorithm. But you guys are gonna backtest that. You guys are gonna go and look for these particular things to occur. We had it here earlier today with the market open. Right there. You see it's bouncing across this here. What does it do? It trades up above it, and then goes right back into the range of it. So it occurs everywhere, from the top side, from the bottom side. It just has to be something that you pay attention to. Right here, with market open, we had it here doing the same thing, right? Bounce there, bounce there, bounce there, a couple more bounces there, trade below it, and it go right back into the range of it. So I pretty much wait for those breakdowns to occur, and then I'll look for a trade back into the range. That's when we're in lower prices. So when we're in higher prices, whoop. You see this here? How it went up above it, and then the strong wick came back inside of here. That was going up above this and trading back into the range. So we took out that zone and did that below here, and we just took out that high, and you saw it do the same thing after this zone was taken. So it happens both on the top side and the bottom side, but you have to back test it and know that this is when the idiot box begins. It's happening across that candle. And then you see us trade below it, and then you see us go back into the range of it. So that's a good thing for you guys to back test when you go over this video. Now, I bet you watched this video, right? So remember what I said, with these FOMC zones, the volatility tends to strike through a lot of the different things that we have marked out. But even within a single candle and the wicks of it, you still see them respond the same way. So we have that there. What are we doing with this? Why do we know that we're not shorting this? Because we're mitigating this multiple times here, right? And we're expecting it to trade up above this, right? And then go back into the range of it. So again, it's something that happens on every time frame, you know, every day even. And that's all I wait for when I'm chatting about lower prices. So we have that there. I have a possibility of price trading into these alerts that I have up there. And then we can see a move back into the range of it. There's a fractal tap there. We know who this is on this end. Video 9 mentions this. Hey, that's beautiful. I didn't even remember that. I don't really watch the videos to remember them in detail, but I know the most important things, at least video 9, the importance of video 9 was the change in order flow. So the important things I'll definitely, you know, remember. Remember, this is not the press conference. The press conference is at 14:30. They kept the federal funds rate here. They're holding it. They're probably waiting for the banks to get their books in order. But them choosing to hold it is just going to cause inflation to uptick more. Some of y'all ready for inflation to go up again? Got enough payouts to withstand it? That means you got to find enough discipline to outpace it. So there goes that high. Why did we say that high was going? Because what it was doing, mitigating the zone multiple times, which ends up making it weaker, right? So now we want to see it trade up into this and then back into that range. And it's a simple phenomenon that takes place that, you know, you guys see every day. And it's oftentimes where the range occurs. Some toilet paper people got cooked. So yeah, our whole prerogative, our entire prerogative should be to outpace inflation. It's not to yell at the old ice cream lover about how inflation is taking off and it's bite inflation and all is it. Please, inflation been going up since the year 2000. Some of y'all ain't even born. Y'all ain't even born yet. Going up your whole life. You talk about bite inflation. It's been going up since forever. Ever since I can remember. So it's not, has nothing to do with the chief in office. Ooh, that was a nice little drop there. Nothing to do with the chief in office. Oh, who buying up there? We just go back to the race, you know? Let me just keep this mark down here, just in case we start darting. If we start darting below here, you're not looking for any longs until we get down below this wick here. Because then what you end up having is another bounce onto what? Mitigating there multiple times to the left, right? Still. Because even when we trade away from it, we come back to it, still give another bounce on it. And then you see us go to get that. Just in case we get back below that. No matter who's in office, inflation is always going to spiral out of control. Inflation is nothing but greed. And as a result of multiple things, but printed money is one of those. When you think they're putting down the printer? Please. When are they going to put down the printer? Please. They going to go to hell with that printer. If the ship go down, guess what? The thing that's going to survive is that printer. So guess what that means with inflation? The best thing they were able to do for the most corrupt people in power was to take us off the gold standard and turn on that printer. Y'all help me shame ProCharge for trading their FOMC. Help me shame him. I have a perfect driving record for 15 years. Progressive tried to raise my insurance by 20% after they raised me 50% in the last year. I shopped around and found out Progressive is 40% cheaper than the next guy. It's the monopolistic corps that are effing this country and every country, not just this one. And who do you think is going to protect the monopolistic corporations? Say it with me. Both the Democrats and Republicans Both. Both of them. Both. Both. I don't know how much times I can say. Both. Both. They call that DP. There's a double pen. Let me just. I don't go too far. You know, there's kids that listen to this stuff. So, both. So it makes no sense to be getting in them wars in politics, where you know at the end of the day, both of them will be looking out for themselves. Manipulating the zone while taking something. Robert, you see what I'm saying with that? Remember how I said you don't short until you get something taken, right? So it manipulates into an unmitigated zone to the left after taking something. That's still the same thing as mitigating there multiple times, trading up above it, tapping into something unmitigated, and then trading back into the range. Same exact, same old, same old. It's doing the same thing on every time frame. Doing the same thing on every time frame. And look, with this is doing the same thing. What is this doing? We traded up above it, right? We tapped onto it with a fractal. We hit the fractal again right here. We tapped onto it again, right? Let me make sure we hit the fractal again because I don't want you to think I'm lying. Nope, we didn't get the fractal yet. But then that gives us another tap here off of it, right? Wherever that tap sends us, whether it sends us higher or whether it just taps up here to in turn dig into it, whenever I get that dig, that final dig in it, I'm waiting for it to trade below it. And then I want to see a move back into the range of it like that. But it does it on all time frames. That's why this morning, when we were trading over here, we saw a zone on the 5-second time frame. Let me just take y'all to it real quick. There was a zone right here. We were in longs through here. I don't know when some of them in premium got in it, but we all said it after. We were looking to take the trade up above this high. Why? Because we were mitigating this single up move multiple times. And I'm sure some of y'all were looking at this price action like what on earth is going on? We just go out to a different time frame. See the same stuff work out the same way all the time. And then what we noticed was when we started trading up here, we said, hold on, we got this bad boy back here that is doing the same thing with this. So now we waited till it get up above this because we saw that rejection there. Wait up until it get up above this. What did it do? Went up above that, tapped into something unmitigated, right? And then traded back down. So on every time frame, it does it. But that's usually what the range is bouncing against. So it's trading against it. Y'all see that bounce on it? How do we know there's gonna be another bounce on that? Who said there's gonna be another bounce there? Market making one-on-one. And not just that, if I look on the 5 second, you can see this wick of the green candle down into this here. You see we traded up above it, tapped back into it. We traded up above it again, tapped back into it. We hit it here again. This is another hit on it right now. Look at it. The Shimon, they running game on y'all. So we know we can get another dig into it, a trade back up, right? But then right through it, and then back into the range of it. Just looking at what the 5 second is doing, but we'll you know, pay attention to that. Here's even a micro one on the 5 second. You see, we're mitigating this area multiple times. We traded up above it with that down candle, tapped onto it, traded up above it with that bullish candle, down candle came back, tapped onto it. We hit it again right here, traded up above it. That down candle form, went back in it. We traded up above it again. We traded back in it. We went inside of it. Look at this green candle in here, did not take the low of it. But then the next candle took the low of it. And what did it do after it took the low? Traded back into the range of it. Teach y'all how to rob these markets. I'm gonna put that yellow one there so they don't clash. So look, we went and what did we say? We can tap back into the middle of it and get another bounce off of it, right? Now there are people who are trying to catch these, and you need to understand that it's weakening this zone, and the most optimal move to trade is when we get below it. When we get below it. So yeah, there's times where price will bounce onto it, run up to the other side, and then make its way all the way right back down to it. And most of y'all seeing it go up above a down candle, and y'all talking about, oh, it's a flip here. Look, it's a flip. Look, it's a flip there. And then you have no idea that this detail is happening in the background. You think you're trading the flip, and then they flipped your account from 500 to 0 in one trade. They flipped it on opposite day. So that's why you're not chasing these closures either. And when you see flips occur around this, you're not necessarily paying attention to the flip that happens around this. You're paying attention to what? What do we say? Structure, right? Yep, that's great. Narrative. This is a part of narrative now. Zones. You would have used that flip that you thought you saw as a zone with no narrative in place. With no narrative in place. And when you went to find the confirmation, you got cooked on it and you don't know why. So when I'm telling y'all count your swings as your first kick, that's literally your first kick. That's literally your first kick. Is your swings. You don't need to chase anything else behind that. Might actually be looking for this right here. This wick right here. So tell me, how during FOMC did you know? How the FOMC did you know? How during FOMC did you know that we get bounced on this candle multiple times? Mitigated multiple times. Now it's gonna take you guys some time to be able to see this and be able to digest it into, you know, what you look at in the market. Many of you guys see top of the range, bottom of the range already, right? Y'all love that, right? These things happen on one candle, on one zone. I told you I was going to teach y'all about the idiot box, right? But with the idiot box, show you that the idiot box happens on one zone. It happens on one zone. Now, anybody that's in here trading this, right? Trading this, anybody that's trading this, for them, it shows how reckless they are to be executing shorts in the middle of the range here, executing longs down through here as it's mitigating this multiple times, because you know, y'all, come on, y'all want the filet mignon or y'all want the skirt steak from Texas Roadhouse? Or the skirt steak from Cracker Barrel? Which one y'all want? You want the filet mignon from Peter Luca, or you want the skirt steak? USDA skirt steak. A profitable trader will know that I am eyeing this particular thing and I'm waiting for it to occur for me to be able to capitalize on that move and get back into that range. So it's very important that you guys are not using this stuff to trade off of. You're using this for narrative. It's not for your entries. It's not for your entries. In the event that we get stuff like this, your entries are on sweeps. But I'm going to leave that for later. So that's just a little hint. This is you paying attention to narrative. Anybody you see executing entries within this, they have no idea what profitability is long term. Because a profitable trader knows to wait for the most optimal time to enter into the market and be able to get in, pay himself, get out. Who wants to pay for everything, knowing that some things aren't worth putting your money on? I value the things that I pay for. That's why I pay no more than $40 for my shoes. Because it's supposed to go on the floor. Do you know what people do on the sidewalk? And my hard-earned dollars is supposed to what? Step on who? Better lay some people out like Xerxes. Better lay the red carpet of people. I'm putting $500 on my feet. You crazy? You know how much rice that can buy me? Where's rice? Where's rice at? Where's rice at? Still, what rice do? I've been neglecting it. Look at that. I told y'all we trading away from that previous high, right? I've been neglecting it because I'm hoping that I don't get it to drawdown when they get back down here. Because that's when I started buying. I want to be in drawdown in my garage. But why on earth? Would I be putting dollars on my feet? You crazy? Nah, I ain't pizza pie. So in trading profitably, you get to an understanding where there are some things you are not willing to purchase. There's some prices you are not willing to be a buyer in. There's some areas you're not looking to short in. And oftentimes it's around this narrative. Now, of course, within some of this, you could probably find like little 5-second trades, but those trades that a lot of you guys have expectations to hold, sometimes y'all sitting right in a zone that's made to be liquidated. And y'all have high hopes of price going back to get something. And you see a trade further down. And guess what? When the trade further down, guess what you do, Einstein? Going on a trip with your favorite rocket ship. Now, you're ready to short. After the price goes below it, it run right back into the range of it. Now you're ready to short. How many coins you want to lose at the circus? They put the bean in the cup. Mix it around 3 cups, and they tell you to choose which one. And every time you choose it, it's wrong cup. So when people talk to me about, they want to know how I get a high win rate and all of that other stuff, it's literally because I'm following these same principles over and over and over again. And should price materialize nothing for me, where I don't get the opportunity to get involved, I'll wait. Because there will be another opportunity. I'll wait. But to become a consistently profitable trader, that it doesn't feel hard when you're actually trading. It has to come from you knowing which setups are A+ and which setups are not. And you need to carry with you structure, narrative, zones, and then your confirmation. That's the only way you're going to survive in trading these markets day in and day out with that same kind of consistency. There are just certain things I'm not willing to put a dollar on. So here go 230. I remember what I said. This is where the idiot box forms, right? But how many of y'all have been here trying to trade the tops and the bottom of the range, and with prices breaking out of the range, you're trying to trade up and it goes lower? When prices breaking out of the range, you're trying to trade down and it goes higher. Top and the bottom of the range is just a narrative. It's not something for you to chase. It's just a narrative. And you find your confirmation within those narratives. Yeah, this is why I like news days too. High impact news days. I'm not talking about them core retail sales and all that other stuff. I'm talking about the CPIs, the FOMCs, the PPIs. Those huge news events. That stuff that I love to trade within, because you get so much structured price action. It's so easy to trade within. So look, going into this zone right here, that would have been a trade right below this bullish candle. Remember what I told you about sell stops coming out of the zone? Right below this low would have been an easy sell stop down into wherever this is now. That'd have been a one-to-one delivery already. But look, we right back at this again. Look at that bounce on it. Not saying that it's going to go up and go back to the high. Remember, we still anticipating for this to get violated here. But observe the behavior around these things. And it'll help you to understand the people who are like, there's a zone. There's a zone with a wick. What are you doing with a wick? That's why I said use a body, because oftentimes when bodies occur, it's not coming out of these things here. Use a body. But no, you know better than me, so you're just going to get cooked until you fail out of the program. But for anybody else that's willing to learn, that's why bodies are important. I just removed somebody from premium today, talking about the fact that Bitcoin was getting ready to have some upside on the 4 hour. Drawing a down candle out with a wick up above it, no body. What are you doing? And then onlookers are, yes, irresponsibly looking at you to take trades on and to get some confirmation. Foolish, yeah, true. But you're trading with no rules. Yeah, it looks like there's going to be some upside now because what? It tapped into a fib level? Where is the body? Sound like a homicide detective. Where did you put the body? It's a 4 hour previous candles high, it went up above, and it was a wick at the top of there. And you talking about upside, and you drawing out 50%. And guess what? Yeet, liquidated, traded right through it. That's why I said be careful of what you guys take in. Sometimes the loudest people in the room know nothing at all. Nothing. Not a single thing that you can rely on. Nothing. So now I thought FOMC was flying. It was gonna, just run that, run that way. Who would have known? There's the little fractal that's there too, but because of that fractal that's there, I'm expecting a run below that as well. Because it's mitigating that fractal multiple times also. It can bounce and deliver a 1-to-1 from here, but I'm expecting that the fractal to be taken out as well. And now that's letting me know how far down in the imbalance it can trade through. So now I'm not using the 30% of the imbalance being in all this drawdown and hoping that it trade back that way. Because the lower time frames showed me the narrative of what's actually there. Gave me a deeper look on the inside of that. Robert, nobody cares about your trades. Please stop posting them in this chat. Nope. Let me turn off. Nobody cares. You can't even follow your own rules. You can't even follow the rules you're told, and you're posting charts in here. For what? Nobody cares. And I need everybody to know that. Nobody cares about your entries if you can't even follow your plan. It is useless for you to be posting it for everybody to see when you can't even make any money with it. Keep that to yourself. You showing me something up here, and I'm trying to draw attention to people understanding this concept that I just delivered, that I just discussed. And here you go, showing us entries from up here. Who cares about that when we are learning something new in real time? I couldn't even show y'all. Went below that, what do we do? Run right back into the range of it. Because people want to show their useless analysis. So again, I went into the seconds time frame and showed you guys what was there. I also showed you guys what was there on the 1 minute time frame. So we went on the 1 minute time frame, and we also saw the 5 second time frame, and we watched both occur, right? The bounce on the here, right? Multiple times. And then the trade below it. But then what did we also say? We want to see it get below this too, because the fractal showed us what was there. So what is the most optimal entry to take after this is liquidated? And what does it end up doing? Running back into the face of the shorts who thought that, yeah, we in this 100-point move, they're going to take us all the way down to these lows. Yeats could beat out at break even. Gave all your profit back in 3 candles. Because you don't understand narrative. It's for the boys that love to hold on to trades. It got to the moment in midi down. It got to the down, and now what if go and take the lower the wick. Because Dante said that the data loans is what target. It's the type targets. It's what white targets. Trying to catch a 100-point move. And with it 3 candles right back in your face. Yeet. Because narrative. That's why I'm telling you guys to slow down. Slow down. Many of you guys are in a rush with all of your entries, and you're going to miss everything. You're in a rush to catch a large move. It has to go all the way there. You got to be right about it, taking the low. And then within just a couple of candles, yeet. Thanks for playing. Now, what are we doing with this up candle? Time for a review. So we really only got one person typing what we doing with this up candle after I just taught the whole lesson. 255 people here. Nobody know what the up candle is doing? What are we doing with it? That means we went back to it, right? What are we doing with it? Mitigating it multiple times. You see that? And tap there. Had a tap there when it left to. Tap there. Look at the behavior when it comes back to it. These are things that we have to pay attention to. Same stuff over and 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 over. And all I told you guys was bottom of the range, top of the range, right? Pay attention to that. That's what I said, right? Now this is me introducing the detail in that. Because it's not just top of the range, bottom of the range. It's coming from somewhere. There's something that is doing this. And a lot of the times, this is where you guys are short. Here's the short. Here's the one-to-one already delivered. Here we go below the previous candle low, right? Homework now. Previous candle low, right? And if you held any more than that, Yeats could beat you on the menu. So as you are learning, you need to understand these dynamics. That's why you take a one-to-one. That's why the previous candle's low is your exit. Because you do not have enough experience to understand all the stuff that is occurring here. Honor that. Pay yourself within your experience and then come to learn more. So there's major detail that a lot of you guys do not see yet, and that's fine. It's going to take you some time to learn that. But we already mentioned where the most optimal entries were. What did we say about profitable traders? They're selecting the most optimal entries, the highest probability entries to be able to execute on, right? And I already told y'all where the highest probable entry was located. And look at that large reach into the other end. The one coming down didn't give 100 points. I bet you the one going back up did. And what did we say about these ranges? We said anticipate the lows getting taken, right? The highs getting taken, right? The lows getting taken, right? And it happens over and 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 over again. This is such a logical philosophy. I really like it. Yeah, you're welcome. This ain't philosophy. This is science. Technical science. You will take it with the same methodology and go and test it for yourself, and you will see the same things occur while you're testing. It's not a theory, it's a fact, and Price will show you that. So this is also, y'all, where many of y'all start using these market structure shifts. Oh, that's a closure there, so that validates that the price should come back up. into that, and then there's a closure there, so I can go ahead and short it down. And whoops, goes right back the other way. There you go. Oh, this is a flip inside of here. Whoops, and then price goes right back the other way. This is why I said closures matter. You guys need to understand that closures matter. Closures matter. Y'all want to use everything else in the book other than closures. Closures matter. Y'all are learning. You cannot use other stuff. You're getting tested on your ABCs, and now you're using Pinyin, the Pinyin alphabet. Now you're using Mandarin alphabet. So this is a very important thing, a very important concept that's going to bridge the gap in what's going to be taught next. But we're going to start exploring this in real time. So for those who still struggling with their highs and lows and what swings to count, you better buckle up because you're about to get left. You should have put in the time when it was required of you. And any of those questions that come across my desk, come across my server, that's blatantly in those videos, you will be removed from the Discord. So yes, guys, there's a lot of detail that you guys don't yet fully understand. And that's why I'm walking you through each bit of it, each part of it. And then after that, you'll begin to understand my entries. So many people want to see the entries first, but don't even put in the time to understand price. So why did you enter here? You won't even comprehend if I gave you the full understanding of why I was entering here. So worry about yourself and trade what you trade according to the rules you're given. You will be caught up, yeah. But know that you are so far behind that you're not going to understand all of my entries. It's not possible. Oh, man, I forgot to turn on the recording. Oh, how did I even... I could have sworn I... Relax. It turned on. Relax, because just to wake y'all up, see if y'all here. See if y'all awake. Because, Lord of the recordings in the chat. And this is unscheduled, too, by the way. Damn sure better be more views on this than the one from yesterday. So y'all see why I'm always saying lower prices, right? Lower prices, lower prices. Now look, we have this down move here, right? Right within here. We see that when we traded up above it, we tapped into it and we left out. Well, we tapped into it with the down candle, the top of it, and the next candle dug inside of it and we left out. So what that tells me is that there could be another tap within here. This sends it up, but should price trade too low and mitigate inside of it, we getting a move down in there and then a trade back into that range there. And these are days where nothing is holding for anybody. They're like, what? You said to use S&D responsible, the S&D responsible got liquidated. You said the first imbalance and the first imbalance got liquidated. You said use the wicks when we had bullish price action, wicks got liquidated. Everything is getting liquidated. What should we use? I don't know what's going on. What is even my name? Because price will make you feel that way. When you just executing on anything and you have no full understanding of what it is doing. You caught in that whirlwind. Thinking something is supposed to hold because you just drew it out. Remember, your money is not in higher prices, right? There's not this unless you a person that shorts, then that's different. Because there are times where as we're going up, I'm shorting every top as we're going up. I've spent days doing that. Every time we pull up above a high, you see a trade back into the range. Every time we pull up above a high, you see a trade back into the range. Guess where I am? Man, look, no hands. Using that when price action offers that. Price action doesn't always offer that, but when it offers that. Trust me, I know this is going to be a banging video. Nothing beats real time. I can't, in good faith, take a video. I cannot, in good faith, take a video and show some little washboard stick figure drawings and say, yeah, this is how price move, this, that. And then go to price and show you it in the past and never show you it in real time. You should see it happening as it is printing for you to gain confidence in utilizing it. Nothing beats real time. Nothing. And this is up to the point where I taught the last opening. So for anybody that was upset that they couldn't join the last opening in December, this right here now, what I've just explained, is up to the point where they began to understand. Now, granted, I think I introduced this before advanced market structure. Yeah, I introduced it before advanced market structure. And I introduced advanced market structure to you guys first. And then it's this. And after this, it's a couple of premium session videos. So while you're taking up your time and learning that stuff and how it all bridges together, that's where the next crew comes in. And the next crew, we reinforce the basics all over again. But some people don't make it through the whole thing. They jump out and jump ahead and cheat the process. You know how many guys that was in the last one? The last opening is right now on Twitter chasing Charles entries. So are you expecting it to go to the 70? You ain't even learn. You don't even know whether it's a body or wick you should use. You expect. Boy, I tell you. So now we see this equal high here. We know we have a low present here. And we know we have another low here. We're not forcing the idea of price taking these things. We're just noting them. Because oftentimes, these are the things that help us to understand our sweeps, what we're manipulating into, and then what we're taking a move off of and knowing for how long. Because there's something else below that it could go down and take. So then we begin to learn the process of when we could hold for a full one-to-one versus when we can't. When we're trading against narrative and when we're not. Those are things that we consider. So I particularly want to see it get under that 93, but let's see what this offers to us. Dave, for the homework, where can I put the PDF? I could have sworn that I said I'm going to open up a section. Why is everybody so impulsive? I know that I said I was going to open up one. If there's none that you see there, what is the PDF hot potato on your hard drive? Is it about to melt it? About to lose the game if you don't give it up? Just have some patience and wait. Where can I place it? Where is it? Relax. That I don't have to deal with people stealing your trades and padding it into their entries, thinking I won't see that they're plagiarizing. Relax. Let me do what I'm doing. Thanks. Yes. Great emoji. Yeet. This is exactly yeet. I told you, it's the rushes. I didn't say the rushes. I said the rushes. It's the rushes. I lived in New York my whole life. Around nothing but rushes. So you get Russian. How does premium membership work? Through invitation? I know I'm at their level yet. Just want to understand. So you have to have 2 months in the member tier, of course. Now I'm looking through people's charts who are on the wait list. And the wait list, we'll start going through it for April 1st. So anybody that's on the wait list, obviously to get on, you contact Charters Anonymous support page, whether it's through the Discord or whether it's through the email. You get on the wait list, and I'm gonna go through your trades, go through all the stuff you done posted in the server. So guess what? Those who posted nothing, you better believe you ain't. You get to the back of the So I'm gonna look over that and make sure that you're at least proficient in both structure and narrative, because zones and confirmation become different in premium. Zones and confirmation is not the same zones that you guys use. It's also not the same confirmations that you guys use. We're utilizing order flow now within that. So we're not doing the whole, county swings and all. That's the preschool stuff. will be, going into just strictly order flow. So those questions about closures and all that other stuff, so would you consider this closure, even though, so there's the body up above that, but the other one got the wick there, so would you still count this one as we don't tolerate questions like that? Like I said, somebody just got removed from premium today asking those foolish questions. You got all of that resource at your hands. You asking questions that make absolutely no sense. That's for proficient students who put in the work. Because we do a different kind of, y'all think y'all see something in this spam section. The spam section that's in there is different. I'm gonna tell you that. It's different. That will speed up your understanding of your approach to price. People get in there and accelerate very quickly in their learning. But you gotta have a foundation. And you're not atting nobody asking them questions. That's is not the place for questions. So what I'm noticing right here, you see this 1501 candle? The 1501 candle on NinjaTrader is not even that orientation. Let me show y'all this. This is the 1501 candle. That red candle there. But look at the candle here. It's a wick with the body all the way down here. Actually, I'm looking at the wrong time frame. I'm on the 32nd. Never mind. It's the but look at this. You take the box, put it over the down. Look at this. Look at what they hit. 50%, and then it's a fractal nature of price, baby. Now what this is doing is on this wick, is mitigating this wick multiple times on the seconds time frame. You see that tap there, that tap there, that tap there, another tap there, another tap there. So, in the event that we trade below it, right, you go back into the range of it. But that's not definitively saying we get here and go back into the range and go back for the high. They're saying where there's a possible opportunity to find a nice scalp long below that after this particular kind of order flow played out. Darren, chill. I tell him I got my degree in Karenomics. Now if something don't make sense, I'm sorry. I'm calling the broker to figure out why this candle is different than that candle. Is this the CME data? Or what? You trading against me? Because why is this candle different than the one that's... Who's lying? Let me get on the phone with TraderView because, you got to dot your I's and cross your T's. So yes, my degree is in Karenomics. So remember, should we return here again, there's another bounce that we get off of that. But oftentimes that's just to fulfill running that low there. Make it another bounce just below it, trade down further, and then run back into it like that. And you guys can backtest this stuff and see these things play out the exact same way. And these candles are large, so there's plenty of money in them. And that little up move that tapped into here and it traded all the way down there. Where'd that go from 37 all the way to 14? That's enough to feed the farm in there. Hey, Charles became the prop firm salesman on Charles, you better bargain for the audience you have. My man is the car dealership salesman of Hey, yo. Look at this. Look at this. Powell said expect to see goods prices going down less quickly. Y'all hear it? Less quickly. That's like the oil containers at the supermarket. The cooking oil. Cooking oil. You look at the advertising on the box and what does it say? Cholesterol free. Duh, there's no cholesterol in what? Oil bad, cholesterol free though. Like what? Less quickly is the word. They really do be playing with people's lives here. Just a word game. Doesn't see rates going back to ultra low levels. That's great. If there were a significant weakening in labor markets, that would be a reason to start cutting rates. So he's saying fire more people, and then we could go ahead with the rate cuts. Long as y'all not firing, we ain't cutting. So now y'all on a chopping block. Fire, or we keep them high. What you think corporate America's gonna do? The guy that stand at the gate, fire him. The elevator guy, fire him. We don't need janitors. We got robots. Fire him. The secretary, get rid of all of them. Fire them. Give him up. The guy that said good morning every morning to me, fire him because I don't like the way he looks. Fire him. That's the prerogative they have. They need y'all to be fired in order to start cutting rates for the economy not to be squeezed. So look, this will probably go up again like that, then go down below like that, tap back into here, trade back here, and then look to get back into there. Look, you're just climbing to that final level I had there. 494. I'm just seeing if there's anything worth catching up on. Of course, I'm going to read through some of this stuff later, but you're going to get all the think pieces out of it. All right, I took that little drop down like that. I had took some trades earlier with premium, but that little drop down goes below here, but goes back to this wick. Remember, and then potentially just below it. It tapped into that imbalance, but it failed here. So you saw that drop. You know, that's an equal high within there. So we get that equal high within there. And that low, this is an equal high on a lower time frame. So look at the lows that are through here. And see if it took out that inside high and then the other high to the left. I told y'all this is. Remember what I said. Remember what I said about the highs? I said there's some days where, whenever we get a run of a high, when we get a run of a high, what do you see? Price go back here, right? Price go back here, right? Price go back here, right? Even this one, ran this one right here. What do you see? Price go back here, right? So some of y'all just be scattering, counting trends on zones as if they supposed to hold. What? You gotta have enough, enough energy, enough awareness to trade with how price moves if you're countering rather than trade. Why do you think I long with 400 points dropping? The market dropping 400, just vomiting, going down to your grandfather's portfolio where he got his stop loss rate. They're just going down there. And what do you end up seeing? I'm just taking longs, right? Because I'm just taking longs within the order flow of price. Give me something and I'll go back in with you. Give me something and I'll go back in with you. Give me something and I'll go back in with you. Give me something and I'll go back in with you. You already taught me that. You already taught me that. Give me something and I'll go back in with you. Earlier today, let me just show y'all this and then I'll close up this recording. Earlier today, I told the stream, we traded up into here, our TP's hit, right? Cool. When we traded back here, I said, I either want to see this low get taken right here, or I want to see price trade higher. In here, I can't look to take any entries because they didn't give me anything. And give me the thing I usually like to see. What is it that I usually like to see? Sweep, tap, flip, sweep, tap, flip, sweep. That's my only model. Sweep, tap, flip. Everybody talking about they got 81 different ways to get in the price. One. Uno, one. Sweep, tap, flip, sweep, tap, flip, sweep, tap, flip. That's it. That's my only model to trade with. And that's how I execute. So when we had this low here, and we were here, even if I knew this was the bottom of the range, even if I felt like we were coming back up for this high here, even when we were in the rest of all of this here, I need a sweep. Now, of course, there was other like little sweeps that happened within here and all that other stuff that you could have found, but I was done taking entries here. I didn't take anymore. And I said, I'll just wait until later. Wait until we get some more volume, more volatility. Where did I just take that? From right in this fractal. The low of this down candle to the high of this up candle here. We traded below it, right? And then you saw us go right back into what? The 50%. So it tapped right into the 50% and shorted down. Guess how much I took from that? On that short going down. How much more do I need than that? I'm sorry. I replaced my daily salary in a minute? Of course. In a minute? I even had I even had the SIM account following all the other accounts. In a minute. Why do I need more? Makes no sense. Now there goes that push there. I think we got another rejection coming out of here. And I think that one will send us back into here. That doesn't mean that we can't have that. Like that. Dave, is Akeem still trading? No. He was trying to start up a group, a trade and travel group. Let me actually. Hope you guys enjoyed that.